with Trevor Croker, who is the CEO of Aristocrat Leisure. And Trevor, every year we come here and congratulate you on the tremendous amount of progress that Aristocrat has made. And we're going to have to do it again this year. Give us a little overview on this remarkable company.
Yeah, thanks, Frank, and hi, everybody. First of all, I think let's have a look at where we were with COVID. We went into COVID in a very strong position as a company, and we focused on three things. We focused on our people, our customers, and our business resiliency. So we refreshed our strategy, we refreshed our purpose, and we refreshed our investment, particularly around creative capability and talent. And at the same time, stayed focused around our customers and making sure that we helped them solve the challenges they had going into the COVID period. And we took a view that we wanted to help them come out of this strong and continue to grow with them and set the business up. So then where do you see us now? Well, we've had a great 21 and we're carrying great momentum into 22, and we've got line of sight of great opportunities into 23. So our base business is in great shape. Strong fundamentals from our gaming point of view. We've got new markets to enter in the gaming business, whether it's in Illinois. In the calendar year 22, we'll be going into New York lotteries and to historical horse racing with Churchill Downs. And then you talk about the digital business, which has really been a great business for us in the last 2 years. And now a business of real scale in our organisation. We're a top 5 publisher in the Western world in digital, and continues to see the ability to invest behind that business for more and more growth. So then where do we go from there? The fundamentals of the business is good. We've got great growth opportunities in new markets and existing markets to take share. We can see adjacent markets that we can invest behind to actually grow into as well. And then we see M&A as an opportunity to accelerate our growth. And M&A has been a big part of Aristocrat's growth. If you go back and look at Product Madness to VGT to Plarium and to Big Fish, each one of those have been a great addition to our growth story and has allowed us to continue to grow. So we take a disciplined approach with growth. We look at the targets, we look at the opportunity, and then we're very aggressive about going after the right target that's the right thing for our shareholders and also for our customers and also for our employees. So we're pretty pumped at the moment coming into G2E.
I can tell. Well, you covered probably every question that I had already, which is great, actually. But one of the things that continues to impress me is, you mentioned digital. I think it was something like 48% of your revenues, and it's a very large percentage in growth of your EBITDA and
Yep.
growing very rapidly. Are we going to look at Aristocrat 3 or 4 years from now and say, you know, they used to be a slot machine company?
Look, what we've seen in digital is coming from the same playbook that we've got in our gaming business. As we focused on great game content, focused on segments where we knew we had capability. We then went after those segments and we were successful. We started in social casino, we then went into strategy games, and then we went into casual games. So it's very much the same playbook that we've used in our land-based business, is focus on great creative content, invest behind that content and scale the business. I'd like to think that in a couple of years' time or 3 or 4 years' time, you'll be saying, well, that's great digital, that's great gaming business, and here's another leg that's going to actually be bigger again. And as I said, M&A is part of our growth story. And I really think that the fundamentals of who we are as a gaming company is still true, and we still stay very true to that. We're moving into digital and we're growing the same way that we did in our gaming business, and I think that our business as a whole is going to evolve because it has to, but we're dealing now in addressable markets about $230 billion. So it's a big market opportunity for us to participate in.
You had mentioned COVID earlier, and COVID has had a couple of impacts. One particularly on the gaming industry last year, when operators basically froze all of their spending in order to conserve cash. Do you see them loosening their budgets now?
Yeah, well, it's affected different operators in different markets in different regions in different ways, and you know, we've got some exposure like other manufacturers to Asia and Europe where it's seen a different change. I think what we're seeing at the moment is the Eilers commentary is sort of saying 21 is probably going to be about half of the 70,000 that it was in 22 replacement cycle, moving back up to circa 50 in 20, sorry, half of 20 in 70 in 20, 35 in 22, 21, and then moving back up to sort of into that 50 range going out. I think what we're hearing from our operators is that through to Thanksgiving there's some fair confidence around what that looks like, and I think we'll see how it trades through over the winter period. The AGA is actually releasing some CEO outlook statements while we're here at G2E, so it'll be interesting to hear what they're saying about that as well. But I think the way we see it at the moment is we're continuing to invest behind our D&D. We fundamentally see D&D, UA and CapEx for gaming ops as the three drivers of our business, and we continue to do that. I feel very confident that as the market rebounds, we'll continue to provide product. I mean, our portfolio at the moment is averaging 3.12 times house average as a portfolio. We've got 11 of the top 25 WAP games, 17 of the top video games for sale, and we've got 19 of the top 25 premium lease games. So that plus great sets of cabinets, we're in good shape, and we hope that our operators, as they rebound, I think they've done an incredible job managing through COVID, is to see the opportunity from our portfolio to continue to grow.
Another effect of COVID throughout many industries has been supply chain disruptions. How has that affected you, and how are you working through it?
Yeah, look, it's affected everybody, as you say. Initially we saw a lot of cabinets and componentry pieces, so button decks and screens were the issues in the early part of the COVID period. It's now moved to more freight and logistics as an overall problem. From our perspective, before COVID hit, we were starting to diversify our supply chain into multiple suppliers and multiple sources of products. What we did through that period is we then went long with a lot of those suppliers on certain components to actually expand our supply chain. And that's been helpful for us, being able to continue to supply with our customers. That said, great performance is continuing to build a great pipeline, so we've got to continue to prioritise that with our customers. But companies that manage their supply chain over the next 12 to 18 months are going to be the companies that be successful, because it is going to be a challenge for everybody.
You've already touched upon a number of issues that investors would be interested in. Your growing cash, your M&A approach. What else is important for investors to understand? And your stock has risen dramatically, and the valuations are not cheap anymore. And given those valuations, what's the investment thesis?
Yeah, so I think there's four things actually. So I think strategy is the first thing, is that our fundamental strategy is known. It's clear, and it's got a large runway towards it. So if you look at what we're doing in our core businesses, what we're doing with adjacencies, how we've diversified the business into digital and made now a business of scale, I think that component, we get a lot of credit for that. I think the ability to then execute on that strategy and deliver every year on what we promise, and actually be able to continue to build on that. So I think strategy is the first part. I think second part's the target market, $230 billion of opportunity, and we're only just touching the edges of that, and there'd be a lot more that we'd like to penetrate in and get that space. I then think the continued investment, we continue to reinvest our money into, as I said earlier, D&D, UA, CapEx for gaming machines, and I think that's an important reinvestment, so we fund our growth each year. And then the financial strength of the organisation, the cash flow, the balance sheet and liquidity are very strong in our industry, and we continue to use those to leverage ourselves to invest each dollar for the next wave of growth.
Is return of capital to shareholders in the future?
I think we're not there yet. We've still got opportunities to invest for growth. So we can see opportunities, as I said earlier, in M&A and also in our core business to continue to do that. So I think it's too early to say we're back to returning capital to shareholders. We'll give them share price growth, and we're confident, as I said earlier, 22, 23, that we can do that.
We had talked about COVID earlier, and I know that one thing that you're proud of through this COVID period is your ability to attract and retain high-quality personnel.
Yeah, well, the three things that we focused on with COVID was, first of all, looking after our people, looking after our customers, and then making sure we had a resilient business. So we stayed focused on that right from day one. What we found through this period of time was our engagement with our culture, engagement with our people has stayed exactly where it was before COVID. So we've been able to maintain great engagement levels, strong culture, and even built some programs about well-being to help our employees. So with that, we've had a lot of people that have had to go onto furlough, which is always tough when you're doing that, but it's more important that we brought them back very quickly. And we had minimum redundancies as well. And so our team generally have come back pretty positive. We've invested in online learning, we've invested in health and wellbeing programs for them. And we're back recruiting now at a level which we saw pre-COVID levels, and we're bringing in great talent. We're very happy with the talent. We were able to source talent in all parts of the world. You would have noticed recently we did some announcements on digital where we're buying some talent into the digital business in Finland. Again, we're able to diversify our business. So talent-wise, I'm pretty excited. We've got a great team. I'm continuing to build from strength to strength.
So we're G2E, where everybody wants to see the biggest and the best and the newest products. What are two or three of the must-sees at your booth this year?
I'm going to go 4 if that's all right. Just
Okay,
I'll stretch
you
it.
can do
So
it.
June is the first one. So a movie that's due to be released and the game will be released at the same time the movie is. So I think that will be one of the first where the game and movie are released at the same time. So there's that one. From a gaming ops point of view, we've got DollarLink, we've got Power 88, and we've got Big Fish Grand, a couple of really interesting and new games. So I think they'll be exciting for players to have a look, customers to have a look at. Then we've got cabinets, we've got Neptune, we've got Cinema, a couple of new cabinets there. And then finally our CX or our systems business, enhancing our Player Max offering, our digital wallet and our B2B social offering. So that's just a small sample of what we're going to do.
Well, it's been a very good overview. Is there anything else you would like folks to know about Aristocrat?
No, I think it's been a great conversation, so thank you, and it's always great to get together every year. We missed last year, but it's good to get together. I think our story is pretty clear. Our core business is strong. It's fun. We're focused on the culture, we're focused on our people, and we're focused on our customers. We see a great roadmap going into 22 with a lot of momentum, and we see even more opportunities going into 23, so we see growth continuing to take share and feel comfortable that we can continue to take share in the business. And we've got 2 businesses of scale now. We've got a global gaming business of scale, and we've now got a global digital business of scale, which we continue to invest behind and look for some more M&A to accelerate our next wave of growth.
Okay, thank you.
It's an exciting time to be at Aristocrat, and welcome to G2E.
Well, always very entertaining and informative both. Thank you.
Thanks, Frank. Thank you.